Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, December 17th, 2023. Hope you guys are having a fantastic weekend, and let's get started. So there's really nothing took place on Friday. We did see a little bit of selling that got bid up. I did say it was quadruple witching for options expiration, so that always leaves the market a little bit volatile, but we really just closed unchanged. So no, the bulls decided not to take any break. I think they're going to try to press this into, probably at least Christmas. I just don't know how much, higher they're going to be able to push this, because this is one of the charts that I've been showing you where it's the stocks above their 50-day moving average. And every single time we've gotten up to these levels, we've seen a decent pullback. Now, we got up here, but you can also notice that we all have bearish divergences in place, and you saw this the MACD crossing over. So this is the reason why I'm showing it is just, everybody is extremely bullish on this market right now. We had 96% sentiment on that Thursday, and right now they're we're just at levels that, typically we're going to see a 5% pullback. And I don't think this one's going to be any different. As I've been saying, like right now, the market's all jittery, or not jittery, I should say jingly, that the Fed said that they're going to do 3 rate cuts in 2024. Basically, it's going to bring, the interest rates, the Fed rate down to like 4.6. Still 4.5% higher than where it was when we had through 2009 into 2020. And in 20, it actually they put more juice into the system, because that's when we had COVID that hit and everything was shut down. So my point that I'm making is that, granted, it's great that they're going to be cutting some rates on it, but what everybody is ignoring is, one of the reasons why they're not going full blown into rate cuts is that the inflation part is still, hotter than where they want it, but they're also projecting that the 2024 what am I going to say? Their growth rate for 2024 is going to be 1.4%. So the thing that the market's all happy because there's going to be 3 rate cuts. It's going to affect earnings, and there are a lot of people that do the fundamental view of things, meaning that right now I believe that I don't have it right in front of me right now, but the PE for the S&P, we're getting close to levels that we've seen all out just massive declines hit. And it's when you get to where you have this many stocks that are above it, what happens is you just run out of buyers and you get a natural pullback. That has not happened yet. What I'm doing is just really showing you, letting you know the risk that there is out there, because there's a lot of risk right now, and everybody's ignoring it. And typically when that happens, you get the rug pulled out. And so far they've the wood's been kind of bending a little bit, but nothing has broke right now. And I don't know what the catalyst will be, but it's going to be something. And I did not expect this type of move at all. I was totally caught flat-footed. Seeing the S&P up at 4,700 from the 4,100 levels in a straight line with nothing more than a 140-point pullback, it's kind of remarkable. But again, the market is so far ahead of itself right now compared to where the economy should be if we're going to be trading at these levels. And it's one of those things where I just believe that people are going to be like, I'm cashing out right now, because this was kind of my end of 2024 projection, not the end of 2023. So here you can see that this is kind of hinting. It looks like we're just doing a little bull flag here, which is suggesting we're going to get another pop higher. If we do see that, really what I would be anticipating, I can't really see us going above this 47.63 level. So not too much higher than where we were, where the high was on last week, which was 47.38. So maybe a little bit higher. This is some major resistance right here. Bearish divergences. You can see the momentum starting to cross here, and this is on a weekly chart. When we look at it daily, we have massive divergences here. Again, a double. We took a little tiny break right here when the market just went sideways, and now we're back into the overbought levels. So we're at some heavy resistance. We have bearish divergences overbought right there. 4,600 is the first really natural support that we have. So it's about 120 points lower than where it is, but really a test of the 50-day, it would make more sense, because typically we do tests of the 50-day. This one we did one day and just kept going up. So that's bringing us down to right around that 44.90 level, which I believe there will be some kind of test. What would make more sense is we come out, we close this gap, and we start closing some of these gaps, reload for the next move higher, because 2024 is typically a bullish year for the market, just because it's an election year. But as I said, there's right now the market's just really ahead of itself. So we have weekly sell signals, we have daily sell signals, and we had these on the 60-minute chart, but all it did was have us go sideways. So we don't really have we do have bearish divergences from here on momentum. But you can see from the price oscillator, this was pretty much the high. So that's suggesting that we could get another little push higher, probably up to that 47.60 level. And the same thing goes with the 15-minute chart. This was the high right here. It looks like we're going sideways. So another push up will give us sell signals on the 15-minute, 60-minute, and we already have them on the daily and the weekly. So there is risk. And then really the last thing that I would show is just where the VIX is right now. And again, everybody ignores this. They just believe that things are just going to continue to go straight up. But every time we've been at these levels, we've seen spikes in the VIX. And here you can see we have bullish divergences, buy signals on the weekly chart. We're at this massive support. And really the last times we were here was when they had QE, the Fed was throwing so much money into the system. Right now they're not throwing any money in. They're just letting loose what they're taking out. And it's again why I'm saying there's a lot of risk out there, and I would not just, if you're long or anything like that, I would just be very careful, because they could pull the rug out at any point. And I just I don't know what the catalyst will be, but everything is there for a decent little reversal. And and that's really the best I can say. I don't know, it's been a remarkable run. It doesn't make any sense to me, but the market doesn't have to make sense. It's going to do what it's going to do. So right now I'm just waiting for what's going to happen, where we're going to get at least a 5% pullback. I do believe that is coming, and it may not happen until after Christmas. But one thing is for sure, that this market is as overbought as it's been in the last really 10 years, I would say. So let's see what plays out tomorrow. Have a great rest of your weekend, and I'll talk to you guys in the morning.